Hey everybody, I just wanted to review the accounting cycle with you. And so that's kind of encapsulates everything we've learned up to this point in the course. And so the accounting cycle is in essence what accountants do. They especially financial accountants who are preparing things like statements and so forth. So the first thing we do is we analyze transactions. And what that means is we recognize how each transaction impacts assets, liabilities, and equity. Once we do that, we're ready to journalize the transactions. And by journalize, I mean we do a journal entry. We debit and credit the appropriate account for each transaction. And then once we've journalized the entry, we post the entry by posting it to the ledger so that we can keep a balance. Remember, the journal is a chronological record of transactions written in debit and credit form. And then the ledger, instead of being chronological, is listed by account. And so that allows us to keep a balance for the account. Once we've posted things, and then we get to the end of the month. So parts 1, 2, and 3, they're occurring in an ongoing basis throughout the financial period. And so for this example, we'll assume the period is a month, the month of December 2019. So 1, 2, and 3, we analyze transactions as they occur, we journalize them as they occur, and then we post them to the ledger as they occur. In step 4, we prepare an unadjusted trial balance. And that again just lists all the balances of the accounts before any adjustments. Step 5, we adjust accounts that we need to. Remember, we learned all about adjusting for those deferred expenses and deferred revenues and accrued expenses and accrued revenues. If you don't remember that, you can go back and check out that video all over again. It was the long one. If you didn't remember, you probably did. Anyway, so we do those adjusting entries and then we post those adjusting entries to the ledgers so that we can get the adjusted balance. And we use those adjusted balances for each account to create the adjusted trial balance. This shows a picture of the worksheet where we had the unadjusted trial balance, then the adjustments, then the adjusted trial balance. Once we have an adjusted trial balance, we're ready to prepare financial statements, our income statement, our statement of owner's equity, our balance sheet, and our statement of cash flows as needed. Once we prepare the financial statements, we can close accounts to close those revenues, expenses, and owner withdrawals back to zero and post all of that into the owner's equity account. After we've closed the accounts, we can prepare a post-closing trial balance, which has the balances of our permanent accounts, assets, liabilities, and equity accounts. 10, it says it's optional. That would just be like reversing entries. If we have any errors we find along the way, we can correct those. And then that's it. We finished the accounting cycle and we're ready to start fresh on a new month and analyze, journalize, post, and so forth. So that's the accounting cycle. And this is, again, a lot of this is done by computers now. And as accountants, we just have to understand the process well enough that when there are errors or when there are audits, we can go through and explain the process and find any issues that we need to.